being influenced by factors, or go back to the pattern, let's say the programmation that I have with my own life. And yeah, when I take it more easy, it works much better, and I accept what's come out from the market. Yeah.
Which nearly brings us to the next part, which is going to be finding the ultimate signals. So Anthony, today we're going to be discussing finding the ultimate signals and getting rid of unwanted noise. So what would be the ultimate signals, and what are the unwanted noise, and how could we see through it, or how could we ignore it and focus on what actually matters?
Yeah, it's a very complex question to solve, and unfortunately no secret formula again today. But I would say, again, I'm going to try to answer this question by sharing my own experiences, and as well, data that I had the chance to analyze, people that I met, professional investors, and even book maybe that I read. But I think the first step towards, let's say, getting good signal is to know yourself very well. I'm going to use my own example. There is things that I believe I'm very good at, and there is things where my track record is not as good as with these other things. So when I say knowing about yourself is learning from your past experience and trying to have an honest conclusion based on these experiences. So for example, of course in crypto everyone is using, most of the people are using Twitter right now. And there is very valuable content. There is a lot of noise, but there is valuable content. I follow a few accounts that are very good. And these guys, for example, they are giving trading signals. And sometimes I look at them because I want to learn, and that's not something that my track record has shown I'm very good with, very short-term signal. But I'm interested, right? There is the part of making money, but there is a part of the ego as well, right? Where I want to win. So I'm looking at these guys and what they say, but I know for a fact, again, knowing myself and knowing my track record and what the data have been showing in the past is if I start to follow this signal, most of the time, I will end up losing money. And the difficult part is I tend to overvalue when I win money and kind of forget when I lose money or how much I lose in this moment. So it's part of this job of investing better is as well learning to know yourself, what you're good at, and not be tempted necessarily to go after every opportunities. Because sometimes, and I've seen that recently, people saying doing nothing is an investment decision. And it's very important to keep that in mind, is doing nothing is an investment decision. And sometimes is as well looking at different signals and deciding that it's very noisy, it's very unclear. It didn't give me peace of mind or clarity. I don't feel it is it is my kind of market, and I'm gonna decide to stay aside. And we used this example before. It's human to want to participate. If you're a kid and you walk with your parents and you see these kids playing football, but you're not very good at football, you still want to be involved because you want to have the fun, you want to participate, you want to be involved. And there is this, that's the beauty of the market as well. It is a kind of community that you join, and then when you're part of it, you have an opinion, you fight for it, you start to exchange. Your attention as well is much stronger in the moment where you're involved. But you shouldn't burn yourself, neither. And that's the difficult part is, how can I consciously decide not to be in the market in the moment, not because I give up, but because I decide that the signal I receive in this moment are not built for me. And it comes with experience, I think. Yeah.
I think this is very interesting, and to me it echoes something. I don't know if it was Warren Buffett that said, when you get stock tips from your taxi driver, then you know that the market is late. To me, it's also, I have started viewing a bit of financial information through the lens of information theory. So super simplified, the closer you are to the node, the closer you are to the more accurate information. The further away you are from the node, the more relays have the information gone through. So that is also a good thing that I've started to look at when I do investing, is how can I get as close to the core, to the leading indicator rather than the trailing indicator. That's one of the reasons why I love Paula's blockchain brief each week, because she shows the equity deals in the space, which gives an indication of where smart early money is heading into a space, and where it can also help me if I find, for example, GameFi interesting. I can see what VCs are investing in that space and get an indication of, okay, these are projects that I might want to keep an eye out and a look out for. And I know that that's one of the ways I've found some of my best investment to date, especially in like clean energy, because I found that's my vision and my passion. And then sort of researching what's happening with, because now we have electric cars, why don't we have electric boats? And then researching into that, and then getting closer and closer and seeing, okay, wait, here investments are made, oh, here partnerships are made. And through that I found one boat battery cell and sort of company that I invested on even before the IPO. So I think, could that be something as well? Try and get as close to the, if I can call it a node, but try and get as close to the core of the information as possible, because the more people, the more relays the information goes through, the further away you are from the actual action, if that makes sense.
It completely makes sense. I think as well, going back to my own investment journey, what has helped me a lot is to build an investment theory. And to do that, because it helps to identify, it gives you a natural filter to say, this project is trying to solve what I believe is what you just mentioned, right? What is the next thing that the market is going to, or the society, the human collective intelligence behavior is going to try to solve. And it's very important to me. It's even more powerful than investing in a single project that we believe because there is good advisor, I don't know, good influencer, good overall kind of polished image. But if not, then the timing is not right with what they're trying to solve, they might struggle, and most of the time they will struggle. So, you know, I was explaining that last time because someone asked me, what's going on in DeFi? Where I should invest? We had this discussion with SB Venture, and I say it's very important to understand the cycle, what we're trying to solve, because every cycle is building up on the top of what has been built before, and it's trying to solve new things for the market. So if you look at the internet, beginning of the internet is build website, exchange information. Then what's coming next is how can I communicate easily with people all around the world, much faster than with the phone, because you have a previous technology, or much faster, let's say, than with a mail. So then email were invented. And what the big topic is which technology we are going to use, which software, which company is going to develop the ultimate mailbox or email experience. That was, and then how can I make friends? And it's going to be Facebook, MySpace back then, and all these things. And then how can I watch video, listen to my favorite music, and etc. and etc. And they were building on top of, Napster at the beginning, exchanging files and stuff. So I think every cycle is trying to solve something different. They're building on top of what has been resolved before. So if at the time where the market is much more interested into investing in YouTube, Netflix, Spotify, if you invest into someone that is trying to develop an email software, unless it's very specific, like we have in Switzerland, Proton Mail, which is surfing a very specific community with protection of data and stuff. But if someone come in 2000, I don't know, 10 or 12 and say, I'm going to compete with Gmail, you better be scared. Even though they're maybe the very competent team or whatever, there is very little chance it's going to work. While if you back them, you invest in very small startups that not necessarily have the same backing, but they say, we're trying to put video online because people they don't read book anymore, right? Or they don't watch TV as much as they used to, or they want to have video on demand because they don't necessarily have the same fixed agenda. Family are going to do. It might be small, but they're trying to solve a problem that is really in sync with what the market is expected. So, and that is taking time to build your own, like, what are we trying to solve right now, right? What is the next phase for crypto, for whatever it is, right? And you quote a very nice example is sustainability level. The obvious thing is to resolve cars because everyone is using cars. But what comes next? Now everyone is taking planes. In hot countries we have boats. So, okay, next phase of adoption. And so on and so on and so on, right? And we see that as well with small bikes. Like now that we can rent. So Uber start with, and then we have. So from the moment, and I remember when I was a kid, I had my neighbor, and I spent time with him because he was a stock investor, and he made a lot of money by investing into a company that was basically doing DeepL or Google Translate back then, because they identify, they are going to publish article, and this article needs to be translated, and if we can automate that, we are going to accelerate adoption and stuff, and it works very well. So, long story short, is I think it's part as well of helping you to remove the unwanted signal. Is to have a very clear investment thesis. And even, you mentioned VCs. When we look at VCs, the first thing that I'm doing personally is not even to look at their portfolio. I'm going of what is their vision, what they are trying to facilitate. And they all have an investment-based theory, which gives them a narrowed investment universe. They are going to say, we believe in a world where gamers are empowered with NFT, and then are going to invest only in games that are using Web3 technology within their development scheme. Or we believe in a world where social media or the data that are created in social media belong to the user, and then they are going to go after all the competitors of Facebook, but are releasing things on chain, such as Lancer and stuff. And there is a beauty with it, because at the end of you create yourself as a specialist, you become very knowledgeable, and you understand what is happening. So, for example, if you look at crypto and social media right now, the theme is how to create digital identity. Simple, right? When we will have solved this problem, next problem will be maybe how can I create value and exchange value and monetize this value without having to rely on an intermediary, or how can I re-own my own data and create the wealth based on that, for example, and so on. So you see, I'm a very little theory because I'm not a specialist. But when you become a specialist in DeFi, for example, I have a much more precise idea of what we're trying to solve right now, because I've been doing that for a long time now. So part of getting yourself into the right signal, because then when the investment theory is very clear, then you click with some content and you reject automatically other content. And it's good. It gives you peace of mind. It helps you to connect with peers, and removing the noise, which is the worst thing in this market. So much information that it's very difficult to have an opinion if you don't have the clarity of mind when you come to look at this information.
Definitely, and if I can add on to that, just based on my own experience, and also building a bit upon our last episode or our previous episode, also maybe timing it, or the better understanding you have of the market cycle, you can also see what part of the cycle you're in and see how much of it is actual noise. I shared after the recording a bit with Anthony on how I love space exploration and I think it's very interesting, and how in 2-3 years ago everybody was racing to get to Mars, and then it was maybe not the ideal time to to invest in space exploration. But it was very hard not to, because just like Anthony said before, there was a lot of hype, there was a lot of things happening. Now, when we're in a recession, we're in a risk-off market, a lot of the valuations come down to a more reasonable level. So sometimes, depending on where you are in the market cycle, you also see a lot clearer what is noise and what is not. If you're in a high part of the market cycle, a lot of the information are going to be noise, compared to as you're in a slower valley, or as you're in a recession or a risk-off market. There might be a bit more clarity, there might be a bit less abundance of information, and a bit more valuable information, or easier to hone in on the value. Like, the DeFi cycle had its hype, now real work is being done. And some of the things that we're currently seeing in DeFi is dilution of token economics, not real alpha, where you incentivize with like non-utility tokens just to get 80% APY, where now some of the good actors are doing really good work, like Hedge Farm, if you want, go and check their Twitter out, where they're finding real utility, real ways to capture alpha, also improving on the security and investment journey within the space. But sorry, Anthony, go ahead. You wanted to say something about connecting, getting away having a clear investment thesis, seeing through the noise, and finding good signals.
Yeah, and then when you have this clarity of the on investment theory, and it all comes down as well to selecting instrument that will help you by design to remove the noise. So a good example is thematic. We are going to release this big innovation at SwissBorg. It's been almost 4 years we're working on this innovation, and we're very happy to release that to the community, because we believe it's a huge game changer. So if myself, I'm convinced smart contracts are going to be the next Amazon cloud or Amazon server in the future, right? I've convinced myself that automation with smart contract, decentralization is an absolutely need to enforce many of the applications that are run on centralized server these days. And it's my investment theory, then it's only one part of the work. Then I need to remove all the noise by, I think now there is almost 200 smart contract, or even more. We're seeing every day there is new layer 1, layer 0, layer 3, layer, and etc. So many technology, so much technology coming. And even for us, it's overwhelming. So I can only imagine, we are a team of 4 people, only in the research level, looking at these things. So I can imagine for any human, it's too much, especially if your work on the side is not your primary source of occupation. So with what we've built at SwissBorg, which is thematic, we give you an exposure that is dynamic, which means that every time there is a new technology that is very legit that comes in, it takes place within this thematic, and it gives you the full exposure to smart contract. Which means in return that if, again, back then at the internet time, you have this investment theory saying most of the consumption of the world is going to move from physical shop to online shops. And most probably 20 years after, you were damn right when we look at the e-commerce market shares, which is immense. But it doesn't guarantee that you will have picked Amazon or one of the leaders in the space. So your investment theory might be right, but then you lose yourself into the noise of the possibilities because you're not an expert, you don't necessarily have the time, and it's very hard anyway to keep updated with everything that's going on. So what we've built at SwissBorg is the perfect product that gives you a direct exposure to investment theory, and it is removing the noise for you. So what we do, for example, with smart contract, we have a Web3 thematic, and this thematic is picking the best smart contract technology that are existing within the time, and we review these technologies, this allocated project on a recurrent basis, that this thematic keep you updated with the latest innovation and development. So not only there is, from a market risk perspective, there is more diversification, but you increase your chance to pick up the winner, because there will be one winner. And there is other people that will still leave, but when we look at the history of the internet, there is a very huge chance that it's going to happen the same with Web3. So Web2, Web3, same story. When we look at the market shares of Alphabet or Google versus Yahoo or AOL, you know, they were all contender back then, and now it's not even a question. So I think the same will happen anyway in Web3. So selecting the right instrument is part as well of removing the noise. And again, we're very happy with this innovation at SwissBorg.
Thank you so much, Anthony. And with this, we're going to conclude this week's episode. Next week, we're going to be speaking about learning from the master, identifying your investment guru. But until then, thank you so much, Anthony, and see you again next week.
Thank you, Alex.